So I wanted just to ask you the question, any comments about this regulation in Indonesia?
I can definitely make some comments there and say that I think it's a theme that's going to continue. What Indonesia has done in trying to limit the scope of access foreign brokers has is very similar in concept to what we've seen in Turkey. Other parts of Eastern Europe are doing it. I have no doubt that other countries in Asia will do it. There's an overlying theme that because we're very cross-border industry, it's very easy for one firm to sit somewhere.
Can I just comment about Turkey? As I've heard from, there was a comment, the article in Magnates, that one foreign company acquired in Turkey the local regulation, which is not in Indonesia, which is totally impossible.
Yeah, there's a couple of companies in Turkey that are kind of like UK-based or Poland-based at the back who have a local offering. So I don't think it's similar in Turkey and Indonesia. But again, for SciSec and for the UK, as far as I know, you need to have a European resident. What's your thoughts on that, Leo?
The ownership, I don't think, what's happening in Indonesia, I'm not real familiar with that. I think that's quite unique in Indonesia. I think in anywhere else in the world you can get FCA. If you're anywhere, you don't have to be based in FCA. The owners can be outside. That's the same. That's true for MiFID. That's true once again in Turkey. What happened in Turkey was that they didn't issue any license. You had to be a bank, basically, and they consolidated that. And they changed the whole ruling basically overnight. It was impossible to get regulation. Go ahead.
Even in somewhere like New Zealand, though, don't you have to have a local director and now a local office? So
that's in New Zealand, at least I'm talking about status quo. You absolutely have to have a local office. You don't have to have a local director. That is definitely something that's being talked about. There's even been a bill that's gone through 2 readings about that. Where that's going to lead is still up in the air. There's been a lot of backlash from the legal bodies within New Zealand about that, so where that ends is not yet clear. But in almost every body, even in Australia, I don't think you have to have an Australian owner. You definitely have to have responsible managers in Australia. But the ownership can be overseas. So what's happening in Indonesia, I think it's quite unique. Whether that's going to be copied now by other jurisdictions, I'm not sure.
Is that trying to remove kind of some outside guys coming in, playing around, and then buggering off?
My thoughts, my experience of Indonesia now goes back probably 4 or 5 years, but what I was very conscious of was the strength of the local exchange and how protective they were over their business. And ultimately, I think it's taken them some time to actually embrace FX because it was always viewed as the competitor to the existing flows that were going through our exchange. And I think it's common for an environment where you're introducing OTC into a historically on-exchange environment. I think ultimately that they felt they had to embrace it, but there is still a huge element of protectionism there to ensure that the existing businesses that are known to the regulators, known to the country and the individuals are still ensured a piece of the growing business, let's say. And I see this happening in other environments within Asia, where there is still concerns over suddenly opening up the market to OTC FX.
I mean, in a way, it's a good thing for the industry because it could mean that you've got more partner channels. Like if you at CMC you had a white label partner, Millennium, and a few others are there. Or it builds the B2B industry, like we have here, because you might have the local companies now running their whole enterprise without the outside guys there.
Personally, I think it will be a stepping stone. I think that ultimately, while that is definitely the white label IB opportunities will exist, I think that pressures over the course of time, and particularly as the other markets grow around and they're seeing more and more money actually move offshore, either through legitimate or official or unofficial methods, that they will have to then embrace, and you'll start to see more, the creation of maybe JVs, etc., of outside firms coming into the region.
Yeah, we've got. I'll just take the question from the front, then come back to you. That means you've got to run around with the mic.
Hi, folks. I'm Advocate Talron from Talron Drehm & Co. I would like to ask the gentleman, what do you think about unregulated jurisdictions such as British Anguilla in the Eastern Caribbean, if you had this experience with this jurisdiction, and what do you think about it?
And maybe we can look at others as well, like your Seychelles or the Grenadines, and look at it also from how can you get payment channels. So if you are looking to set up in these areas, can you get the full suite and can you operate?
Yes, absolutely. We're going back to tier 3. This is what we talked about before. Anguilla, there's other countries that don't have regulation. There's very few. And there's some that have regulation, technically have regulation. We mentioned Seychelles, we mentioned BVI. They actually have regulation. But there's a lot of companies based out of there and working from there. They're not really advocating that they're Forex or binary or something. But definitely, it's definitely a way to step into the market for those that want to go into stage 3 to prove themselves that they actually have a business and then think about going on to a higher level, more expensive type of environment. You are giving up, I would say, the flexibility of banking. You do have bankings that are working with you, that are willing to work with you on these types of regulation, but fewer than if you went to light regulated, and fewer, once again, if you went to heavy regulated. Payment services, once again, you have payment services that are willing to work with you, but fewer, usually more expensive than what you have on the higher levels. And also your reputation is going to be possibly, the question is, how do I know my money is safe? When you get that question from a client, it's a little bit harder to answer. It's not that you can't answer it. It's a little bit harder to answer than if you say, I'm regulated here, I'm regulated there. But absolutely, it's definitely a way that I would say even most brokers start up in the industry is they go for the tier 3 entry level. It's faster, cheaper, much more flexible, and truthfully, you don't have to tell anybody anything. And what can you do? I mean, that's the world.
It's a matter of perception. I mean, depending on the target audience, what would they appreciate? In some cases, you can go to Seychelles and it will be it will pass. You can go to Belize and it will pass. It really depends. But all the infrastructure around, as Leo was saying, is pretty much the same. You will always find technologically, from the third-party perspective of supportive companies, there will always be someone that will support you. So you can exist from anywhere. Basically, just depending how fast you want to grow.
Is there any destinations closer to home for the Asian people? Any offshore destinations that we've not mentioned?
As far as the Asian, and this is what I've heard, is hearsay, I guess, but the Asian market doesn't trust Europe as much as what we would think, coming from that jurisdiction, except for, I would say, except for FCA. FCA would probably be the #1 place that they would trust. ASIC, Australia, I have heard is #2. And New Zealand FSP is #3, which might surprise a lot. But as far as the conception of the Asian market, as far as what they trust, and this is funny, but they would trust a New Zealand FSP more so than SISEC regulated MiFID, and that is what might think, you know. I mean, if you compare the regulations, there's nothing to compare. MiFID is much more strict, and so you'd think that but it's a perception. And when you're talking about perception, again, the name of the country stands out in front.
Just on that, I think a lot of businesses that we've seen, they've gone to New Zealand first, and that was there were some businesses that were literally just set up a bank account, and that's no longer happening. But they'd go to New Zealand first because of this perception issue, and then the regulator in ASIC in Australia has this perception of New Zealand as being, you know, really well-run, you know, neighbours, and so it would accept experience in New Zealand even though it's largely unregulated, and so you could set up in New Zealand, build your book a little bit, move to Australia, get your licence, and then go back into Asia. So we saw that happen quite a lot. I think now this year particularly, it's really going to be interesting to see how those patterns change with the new licensing regime in New Zealand. So I guess Leo, you'd know more about that.
Again, I wish I would say I know a lot more about that. I don't. There's a lot of speculation going out for the last year and a half, to be honest. I've no idea. It could come out soon. It could come out in another year and a half. I've just got no idea. We're talking to the company's office a lot. We're in very close ties with them. But I wish I could tell you exactly what was going on. I just don't know.
We've got about just around 10 minutes left before we get to the closing comments. Are there any more questions or follow-up comments that we have? No, all right. We're just going to look at Australia. Actually, there's a question right at the back there.
My question concerns offshore jurisdictions. You mentioned that Seychelles, Belize, and Guyana, there are a lot of choices, but what choice is the best? Because when it concerns to IPSPs, anyway, they need a European country like an agent or something like that. So tell, please, Seychelles and Belize, they have some kind of financial licenses. Does it make any sense to get this license, or in corporations without license like Seychelles and European agent is enough for a startup, or it's better anyway to obtain this Seychelles license? And in terms of agents, what agents are the best? If in future, for example, you're going to obtain SISEC, is it better to have agent not in Cyprus but in UK, say, or Cyprus is okay as well?
I suppose the first point is who pays the most commission. But I think, Lior, if you...
Well, it again goes back to what we were talking about before. You can find solution in any tier that you're at. If you're a Seychelles unregulated company, okay, there is something, you are correct, there is a license in Seychelles. It's actually not really issued anymore, but it does exist. That is the case also in Belize, that they do issue it, but BVI also, almost every country in the world, even the offshore countries, have a license today.
I think, Leo, what they're looking at is like when they say best, they want to know what's the most stress-free, less paperwork. How can I do it in the click of a finger?
Truthfully, anywhere. Sorry, but it's if you know what you're doing, you can do it anywhere. You just have to find the right guy. We do it all the time. I'm not the only one that does it, but it just you need to know who will accept you for what you are. We can find you a solution no matter what you are. Just tell me who you are, who you want to be. We'll get you a solution. It might cost a little bit more. You might have less options than somewhere else. But that's the truth today. I don't know if that's going to be tomorrow. That's the truth today.
Thanks. So just looking at Australia, you've got some new capital adequacy rules coming in, some CFD changes that ASIC's been looking at. What's been the big shake-up? Why in the last few years?
Well, I think the capital requirements have come in, as they have been coming in uniform across a whole lot of IOSCO member countries, and also as a result of some of those G20 summits. But look, I don't think it's a lot. It's very similar to other jurisdictions, about $1 million. So it was $500,000 that came in 31st of January 2013, and then it's 1 million. It's really 1.1 million. Because if you drop below 10% above your minimum, you've got to notify ASIC. So it's really 1.1 million, and you have to have it by the 31st of January this year. We've had a lot of requests about creative ways of meeting that requirement. At the end of the day, whatever you do, it has to sit on your balance sheet. And so you can have a subordinated debt agreement with another provider, but the other provider is pretty much giving that money to you. Because it can't have any rights to that money. So that is one way to meet that requirement. But look, I think interestingly with binaries, they're treated in Australia as a derivative. So if all you wanted to do was binaries in Australia, you'd have to meet those NTA, net tangible asset requirements. Introducers are exempt from all of this. And so there are some introducers that have come into Australia and they're holding off from being market makers until they can work out a way of doing it. So that's some things that we're seeing happen.
There's certainly a lot of existing Australian brokers walking around rather happy that the competition is now slightly limited.
Yeah, and I mean, a more exaggerated example of that happened in the US when they really amped up their capital requirements, and I think some fairly pleased providers when that happened.
So is this going to put people off to say, you know what, I'm going to hit a glass ceiling where we're going to be restricted in some way? And is this really going to create hurdles in our industry?
Personally, I think that over the next 3, 4, 5 years, we'll see considerable consolidation in this industry anyway, whether it's driven by regulatory factors, economic, purely, to be honest, market factors. Yeah.
Sorry. Yeah.
Well, I think it's good for the industry. I think if you're dealing with large amounts of clients' money, it's not a bad requirement to have to hold a bit of cash. I think it's good.
Correct. And,
Good
and
point.
again, it's been driven ultimately by clients about security. Clients becoming much more aware of what regulations are, what's in it to protect them, the concept of segregation, etc. And all of these factors are basically limiting those that can offer these services, particularly within the regulated environment, to effectively well-capitalized, well-run businesses. So I think that, yes, I think that's important. I think consolidation is necessary within this industry.
And look, one area that Australia is a little bit behind in terms of Europe and the US and a few other places is in Australia you can legitimately use client money and place it with your hedging counterparties. There's talks at the moment about changing that, and there's some brokers that are really pushing for that in Australia, and then there's others that are saying it can be done safely. So I think that's the next frontier in terms of the government stepping in and making some decisions about using client money. So.
I think one thing that's making this an easy conversation to have about onshore, offshore is at the moment there hasn't been that big offshore scandal. About 10 years ago, Refco went bust, and that flagged up a lot of lack of regulation around them, and thus really made the clients aware that they needed to look at who was regulated, who was looking after their money in a safe way. At the moment, there may have been a lot of those scandals, but either the clients came out okay or they're not that well publicized. If that was to happen, I think that would change this conversation a lot.
What I would say about offshore as well is that a number, particularly the MiFID-based brokers, would not accept an offshore broker as anything other than an introducing broker. So therefore, the client is still then being exposed to MiFID regulation and rules. Back to your earlier question about where best to get regulated and how, and as Leo said, you can get incorporated anywhere and apply for the necessary regulation. But ultimately, a number of these companies, unless you are going to be limited, if you wish to be a counterparty, on where you can source your liquidity from, you won't be able to access a number of the leading European brokers, for example, because you wouldn't satisfy their eligible counterparty status.
You know, we got this to get regulated or not to get regulated. How do we look at the recent PFG and World Spreads case? You know, people out here are going to be saying, well, in markets like the SEC or the NFA or the FCA, things are tumbling.
Well, I would say this, and this is something to do. It doesn't mean that if you run a regulated body, if you're a regulated body, that you're running it cleanly, and it doesn't mean if you're non-regulated, you're running it dirty. What you do and how you run your business is really up to the way that you've decided. It's a management decision. The regulation forces you more so to be in touch with the regulator, it actually makes it more difficult for you to run a world spreads. How world spreads happened is, I think somebody really needs to look at what went on there, because in theory that should never even be allowed to get anywhere near it. But the gap was massive. But yes, you're always going to have unique cases like this, but I think that's going to be a unique case when it happens in FCA. And where it happens in a non-regulated world, where it can happen more often, I think it'll have a lot more. It'll be a lot more common, but probably a lot smaller.
Coming back to the offshore point, I know it's the buzzword for today. What kind of best practices can people implement already to try and get used to this reformed environment if they're going to go from tier 3 to tier 1?
Well, the first thing is AML. That's the anti-money laundering. There's basic rules about that. KYC, once again, there's basic rules about that are across the board in any jurisdiction that you go for. There's segregation and capital requirements. Let's just leave that aside, but let's say one thing. As far as segregation is concerned, it doesn't really need to be segregated as long as you have sufficient funds to, at any one time, cover the client equity. And when you fall below that, that's when you start going into an area that's, well, you won't be able to get regulated in any reasonable body. But those are the main things. And if you can run your business that way, proper KYC, proper AML, sufficient client equity against cash reserves, actual cash, you're doing what you'd probably need to do under a jurisdiction, under regulation anyway. And now that next step will be a lot easier.
And I think in considering the next step, and this will only apply to some people, but if your business has money managers attached, then in Australia we call them managed investment schemes or managed funds, whatever. In 2016, with the Asian region passport, when that comes in, it will mean if you are pooling client money, you'll be able to passport in. So far, the signatories to that, I think, include Singapore, New Zealand, South Korea, and I think that it's just there's signatories are starting to add up, and I think that we'll start seeing some of those synergies between some Asian countries and Australia, which will be really good in terms of a regulatory perspective. You just passport straight in there. So that's more for the money management side. I think as far as I agree with everything that Leo said. I mean, if you're running if you've got a good balance sheet, then you're going to be able to slot into a regulated jurisdiction pretty easily. And the other thing that we haven't talked about is the ease at which, if you want to provide services to wholesale clients, we're talking about the end user a lot, but if you're FCA regulated and you want to provide a white label software solution, be an LP to someone in Australia, then Australia recognises about 6 jurisdictions, including the FCA, Singapore, Hong Kong, etc., where if you're regulated in those jurisdictions, you can provide financial service into Australia as an LP to a wholesale client, and you don't need to be regulated. So there are some advantages in being in one of those main sort of the 6 larger, more recognised jurisdictions.
Perfect. It is a detailed topic, so that comes to the end of this panel. Thanks very much for listening in. If you've got any feedback or comments, you can always come and speak to the panelists. Thanks to the panelists. It's been very informative, and I think we can take a lot back from here. And that brings kind of this whole panel session to a close at IFX Expo. John's going to take over from here. Round of applause for the panelists.
Right, so all that's left is for me to lightly summarize or sum up the last 48 hours of IFX Expo Macau 2014, which I hope you've all enjoyed as much as I have. I've got some very short terms and conditions to read out. Non-refundable, cannot be exchanged for cash, no change will be offered, used to be regulated by SISEC, currently under investigation by the FCA. That is your free beer ticket here at McSorley's. God, and that was a joke, by the way, as well, gang. Come on, it's the end, you know. Which I believe is sponsored by Trade Next, correct? There's drinks involved, yes, yes. And my other favourite of today, actually, is the Tradinator. If you haven't seen this, whoops. If you haven't seen this, this is a foreign exchange slot machine for casinos. Now, I don't know what regulatory platform that falls under, whether it's gaming, gambling, foreign exchange, trading, investment, etc., but I'm sure we could have another panel solely, purely just on that. I do recommend going and having a look at it. It's quite fun. Over the last few days, we've heard liquidity, execution, connectivity, new tech, deposit conversion, marketing, how to market in Asia, how to market in China, social, mobile, regulation, domicile, and generally, I think, an extremely educational conference for anybody from both outside of Asia as well as within Asia. Those of us in the rest of the world tend to forget that Asia is not a single place. It is a collection of a very vast number of countries that are all extremely different and difficult to do business in. And hopefully over the last couple of days you've learnt and met people, mingled with the mingler, and made some new alliances, perhaps some new customers, new suppliers, etc. So without further ado, that, ladies and gentlemen, is the end. And please do come and join me over a cold drink with our friends from TradeNext. Thanks very much.
Just before you... Hello? Can you hear me? Just before you leave, just want to reiterate that we've got Mingler. It's our own social mobile app. It's really useful for business networking. Any of the people you've met here or haven't been able to get in contact with, you can get through the app. So it works as a little bit more than just a LinkedIn or a Facebook. And it's really designed for this industry in particular. So please download it. It's on the iPhone and Android. It's free to use. And share us your feedback with it. Thank you.